Welcome back. Well, it is turning out to be a session where at least the mid-caps are seeing pressure and the Nifty is managing to hold up in the green. But on a week-to-date basis, you'd have to say that there is a bit of a divergence in terms of performance when it comes to the Nifty and the Sensex, and that is courtesy probably the Adani stocks. So you can see that the Nifty has risen marginally on a week-to-date basis. The Sensex has managed to outperform. But one of the indices which has stood out is the Nifty IT index, which has really come back into flavor. So up around 2.5% on a week-to-date basis. The mid-cap index, as you can see, has been under pressure, down around 0.7%. But the other big key cue to watch out for is the collateral damage from the Adani stocks, what the banks would do going forward. And in that context, State Bank of India and Bank of Baroda, which are releasing their Q3 FY23 numbers today, that will become very relevant in terms of commentary with regards to that. So that is something that the street would be watching out for quite closely. Separately, a lot of other numbers today, ITC, Divi's to name a few, and a couple of these interesting broader market stocks such as Interglobe Aviation, which will be releasing numbers, Sun TV, Manappuram Finance, Marico. So all of these companies will be releasing numbers. So a lot of action within the broader markets as well as in the frontline indices. But Mangalam, you're watching more of the FMCG space.
More of the FMCG space. You just spoke about a lot of numbers that will come out today. I'm talking about some numbers that came out yesterday. And from the Nifty pack, we had Tata Consumer reporting their numbers. Well, they were largely in line with expectations, but weakness in their international business still continues despite some sequential improvement. And that's exactly the question that I posed to Sunil D'Souza. And he said that, going forward, the international business will improve and the margins will perhaps be the leading margins for the overall industry by the next 2 to 3 quarters. Let's hear out the conversation with Sunil D'Souza himself.
Coming specifically to the international business, number one is I think we've seen a perfect storm of sorts. Overall, the huge environmental volatility in the macro environment, inflation peaking or very near multi-year highs, both in the US and in the UK. Currencies moving in all directions, and that impacts us a lot because, for example, tea we buy in dollars, sell in pounds, and then report in rupees, right? So you can imagine there's both transaction and translation. And apart from that, demand sluggishness. As people have taken pricing, the consumers have started tempering down their demand. So in the face of this, we've taken some strategic actions, so to speak. In the US, we're doing a pack price rejig. So US, you would have seen overall volume softer, but revenues on track. I mean, broadly flat versus a year ago. And in the UK, effective 1st of February, we've taken a very aggressive price increase, which has already gone into play. So yes, sequentially, the international business has improved. EBIT has moved up by about 240 bips, but we do expect that trajectory to come back. The international business was always incremental or accretive to our total portfolio, higher EBIT margins than the India business, and we aim to put it there over a period of at least 2 quarters.
All right, we take that point. And on India business itself, you said that the India beverages business was rather soft, but a large part of that can also be attributed to the delayed winter. Now in the 4th quarter, winter has spilled over. Can we expect some growth out there? You've lost about 110 basis points market share in tea business as well. How long before you claw that back?
So Mangalam, you're absolutely right. Essentially, the way our business is geographically structured, right? So the softness in rural and the delayed winter, I think both played a role in the volume softness and therefore the market share softness. We do have corrective actions in place on distribution, which have already gone into place. So that will get corrected. Hopefully, we will improve distribution still further from where we are. And the winter setting in, I think middle of December onwards is when we started seeing the serious winter come in. So I'm just hoping now, very early days, but I'm hoping we've bottomed out in terms of growth, volume growth, industry volume growth overall in the last quarter. December was decent. January was better than December. But I would still say I would watch this quarter before we say we're totally out of the woods. That said, I think especially on the volume piece, we do aim to turn the corner in this quarter. But coming back to our rightful place, if I may, in terms of both share as well as margins, I would probably say one more quarter.
All right, and let's talk about the parts of your business which are doing extremely well now. Narishco, 66% growth, of course, comes on a low base as well, but it has been increasing because of the things that you're doing in your business. So can we expect 1,000 crore sort of run rate coming in from Narishco in FY24? Is that realistic?
So Mangalam, you've stolen my thunder. This is exactly the target that I've put out to my Narishco team. Okay. Right? Just as a perspective, Narishco, when we bought it in May of 2020, it was 180 crores. This year, we will be touching close to 600 crores, both with expansion of geography and portfolio. So Narishco is on a strong wicket, and we continue to remain bullish about that business.
I'll try not to steal your thunder on the food business, so I'd ask you to tell us what your target for the food business in FY24 is.
So the food business right now, as you've seen, Mangalam, despite all the volatility that is there, despite the fact we've taken a 33% price increase in salt, given the input cost increases, we've continued to gain share, 90 bips. We've continued to show volume growth and significant revenue growth. On top of that, the Sampann business only is, I would say, the icing on the cake. The India growth businesses, Sampann is part of that. Sampann has grown 37% last quarter. This is the second quarter clocking upwards of 30% growth. Margins in a healthy space and continuing to improve. The India growth portfolio overall for us, when we started in FY20, was about 6%. It is now up to 13%, and we continue to aim to increase that proportion going forward. In fact, if I may, we started primarily as a tea and salt company, primarily tea and a little bit of salt. So it was a 60-40 ratio when we started our journey. Right now, we're inching towards a 50-50 food and beverage mix.
All right. And final question before we let you go. Mr. D'Souza, the word on Bisleri. I mean, everyone's been talking about it. The management said that you guys were in talks. I won't, ask you to explain the rationale, or whether it is happening, etc. or not. But just as a part of the Tata Consumer portfolio, would it really make sense to get a brand like Bisleri or any other water brand, and in this category itself where, there is a fair amount of competition, margins may get diluted? Your thoughts on the same?
So Mangalam, I'll not want to get into the details of the space, but like I said, we're targeting to grow both organically and inorganically. I think we've proven we can grow organically. Like I just mentioned, our growth businesses have moved from 6% of our portfolio to 13%. And we are very, very confident that we will continue to move this north. But inorganic is also a big piece of our game plan. And in the inorganic piece as well, we've very, very clearly identified the categories in which we want to expand, what we cannot do ourselves or we cannot do quickly enough. And therefore, we're looking at inorganic spaces. Ready to drink is an important play for us because we do think there is a huge growth opportunity ahead in India. And I would just leave it as any business that we look at for inorganic growth. We look at value creation, which inherently means margins and returns better than what we have on our existing businesses.
All right, finally, makes sense then. And you said 15% margins is your short to medium term target. Is that on the cards in FY24? And do we expect, say, double digit or low teens sort of growth there?
So Mangalam, we will continue to target double-digit revenue growth and margins ahead of where we started off as a company.
Okay, so that's the word coming in from Tata Consumer Products. We need to take a short break, but on the other side, we'll be connecting with Harsh of India Grid Trust to discuss the impact of Budget 2023 on REIT and InvIT. Stay tuned.